Hey guys, welcome back. I just published a video where I discussed how I adjusted my covered calls when the underlying stock started running up because I did not want to lose my stock. This was part of my core position and I wanted to open up some of the upside. Now, in this video, I'm going to explain to you why the covered call on Thor was a completely bad idea and what I did to salvage some of my lost profits because of the short calls. Now, a quick disclaimer, please note that this is not a recommendation. This is purely for education and discussion purpose. So please do not go and try to replicate the same trade. Now, this is how my position looked on the 14th of February. This is how the combined position looked. I had 1100 shares of Thor, which I was assigned to at $55 because I had sold some puts on $55. And I have 6 short calls. This is after the adjustment of the original 11 short calls. Now, as I mentioned earlier, that I separately have quite a large position in Thor Industries, but these 1100 shares are just part of this combined option position, which I am trying to explain here. And the 6 short calls are made up of 5 contracts of 60 strike calls. These expire in distant future in January 2022, and 1 contract of 75 strike calls which expire in January 2021. Now, this is after the adjustment. My earlier short calls were supposed to expire in near future. I adjusted and I basically rolled out the earlier calls. There's certain advantages and certain disadvantages which I have discussed in the previous video, and this is what my current profit looks like. As of 14th of February, I'm sitting on $17,582 of open profit, and you see the max profit is unlimited, which means I have uncapped my position, which you can also see from the payoff diagram, and the break even for the position is 57.88, and this is on a $58,684 investment. This is how it stands as of 14th. Now, this is the time to look at the option Greeks. Now, I will show you my basis for adjusting these option trades, which is quite different from what most novice option participants do. And they just focus on the cash generation without really understanding how this is going to be affected by the various factors. My main focus while using options, apart from the difference it is making to my return on capital, because remember, my option positions are completely aligned with my long-term investing. Now, my focus is to understand the option Greeks. And if you are using options without understanding the Greeks, then you should take a pause and make it a point to learn about them. I will be more than happy to help you navigate through them. And trust me, you will be very, very pleased you turned your focus to them. You will realize how powerful the option Greeks are in dictating your performance. Now, there are 5 option Greeks, of which these 4 are commonly used. That is the delta, the gamma, the vega, and the theta. In this video, I will just talk about one of the Greeks, and that is delta, and I will cover the other Greeks in subsequent videos. The delta is basically the sensitivity of the entire option position to the movement in the underlying stock. So here you can see our position has a delta of about 645. So that means if the stock price of Thor goes up by $1, our entire position will benefit by $645. So my profit will go up by 645. Now, this is not a static figure. Even this delta changes based on different factors, but I will cover that in subsequent videos. So as of 14th of February, I'm sitting on a positive delta of 645. And now let's break up our position. Now, the combined position that I have, that is made up of 1,100 shares of Thor, and that is sitting on profit of $34,800. However, the call component of my position, I have 6 short calls, and if I just look at these short calls, they are sitting on a loss of $17,244, and that is not nice at all. Now, these short calls have a very ugly looking payoff diagram. As the stock price goes up, I end up losing more and more money because of these short calls. Now, I had purchased the stock in the first place after a long period of painstaking research, expecting it to go up over time. But see what I have subjected myself to just because of my short-term greed of trying to generate some short-term cash flow. So my overall position profit of $17,582 is made up of an unrealized profit of $34,826, which is due to the 1,100 shares of Thor, and an unrealized loss of $17,244, which is due to those ugly short calls. Now, this is what we need to take care of. Now, I'm going to show you exactly how I knew what I needed to do to compensate for that loss. Now, if I break up my entire position into the shares and the short calls, you'll see the 1,100 shares, they have a delta of 1,100. That's very simple. If Thor share price goes up by $1, my 1,100 share position, it benefits by $1,100. So that's pretty straightforward. Whereas the short calls have a delta of a negative 455, which means for every dollar increase in Thor share price, as of 14th of February, my position is losing $455. So the combined delta is 1,100 minus 455, which is 645. Now, it is these 645 deltas, which is basically the sensitivity of the position with respect to the stock price. Now, I'm always conscious about this reality because I always, in my head, break up the positions and try to see the contribution of each leg of my position in terms of the option Greeks. And I knew I had to do something to increase the positive delta of the combined position. So to offset this negative 455 delta, I could have just purchased 455 shares of Thor, right? That would have immediately brought in a positive 455 delta. But that would have required a huge investment, 455 times almost $87. And as I said, because I already have a large exposure to Thor, I did not want to put in any more capital into the position. So this is what I did. Now, if I go back to 15th of August 2019, that's when the share price of Thor had got decimated. It was trading around 42 levels. And I knew that it is extremely undervalued because, as I had mentioned earlier, my evaluation of the intrinsic value of Thor would range anywhere between $65 and $85. So this extreme undervaluation had to correct at some time in future. So what I did was, you remember I had brought in a few $1,000s of cash inflow by selling those calls. I took about $1,000 and went and purchased some long calls. Now these are way out of the money. These have a strike of $75 and they expire 519 days from the date of purchase of these calls. So these are leap calls that are out of the money. But the delta of these calls at the time of purchase was only 85 delta. Now, mind you, if I wanted to, buy more delta, I had to pay more. But there is a beautiful characteristic that these long calls have, and that is called convexity. And I will explain that later when I talk about the other Greeks. So delta is not a static figure. Now, I just paid $1,079 to purchase the 85 Delta on 15th of August 2019, and on 14th of February, see what the Delta looks like. The Delta has actually increased to 347. So this to a large extent compensates for the negative 455 Delta which my short calls have. I mean, not fully, but to a large extent, because this is a positive Delta. And just this long call position is sitting on an unrealized profit of 8,771. So my combined position, which had a profit of 17,582, I managed to add another $8,771 of unrealized profit to that. And my total unrealized profit is right now 26,353. So while it is not fully compensating the potential almost $35,000 profit which I would have had if I just had the stocks without bothering about these short calls at all, but still to a large extent I managed to offset the negative $17,200 which my short calls contributed to the whole mix. So as I mentioned in subsequent videos, I will go through each of these option Greeks, and you'll actually find them very interesting. They're extremely versatile, and using these, you can often adjust your positions, or you can often make a much superior decision on the kind of options that you need to use. And as I have mentioned earlier, I don't trade options. My options are completely aligned with my long-term investing. And if you are interested in learning more about how to adjust your option trades, how to get into option positions that are completely aligned with your long-term investing, and also how to use Greeks to decide what is the best option for you to choose, and calculating the yield of an option trade appropriately, then I would encourage you to register for free on moneywisesmart.com/research. You will see quite a few videos on different option strategies that we have published already, and there are several videos that we are going to publish discussing these various concepts. So do register. It is free as of now. I also invite you to join our Facebook group. The link is provided below. The group is called the Investment Forum, and we discuss lots of very interesting investment concepts, concepts on options, as well as we share deep dive research on some great companies. So it's a community of no nonsense investors, and I definitely think that you'll enjoy the discussions going on there if you are a serious investor. And if you have enjoyed the video, do hit the like button. That keeps us motivated, and do subscribe to our YouTube channel. Also, don't forget to share the video with your friends. So thank you very much for your time.